Good evening, Doc Severson here for the Theo Night Report for Tuesday, June 6th. I'm starting out tonight's report looking at the Nasdaq futures, and to say that this chart is a little bit stretched out is a bit of an understatement. Now, I am not expecting it to crash from here. A little bit more on that in just a minute. However, I would expect to see the chart perhaps pause. Now, I know I've been saying this for quite some time, but eventually this will pause. We have now a triple signal here. We have all time frames, all of the major time frames, monthly, weekly, daily, are now stretched from a linear perspective. Now, markets go between ranges of range contraction or just consolidation to range expansion, to range contraction, to range expansion, to range contraction, and range expansion again. You can see that each one of these is getting, the contraction period is getting smaller, 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 and then the eventual range expansion is also getting a little bit shorter every time we're going through this. This is very, very common as we get up to eventually what should be a larger time frame consolidation, which is factored in by this, right? But getting to that point, especially on an uptrend, this is why we always say that market tops are a process, because they seemingly just take forever to get there. And when it does pull into more of a larger time frame consolidation, and again, I'm not expecting much more than just this, or maybe even this, or maybe even this. You know, these are 2010, 2011, 2012 kind of consolidations that we had along the way. You know, from something similar, there's the closing bell, from something similar in terms of an exhaustion point here. So that's really all I'm expecting up at this level. Now, just because I'm expecting this really means nothing. And I see a lot of people putting a lot of weight into the market owes me a correction. I don't believe that. I just anticipate that the market is going to go into a less linear form of movement, because this is what it always does. It goes from linear movement like this to less linear movement, which is almost like coiling up the spring. So it's not going to come in the form of some type of crash, I don't believe, unless we have some kind of exogenous event that comes along, which really there's nothing much that we can do about. So to this point, I want to bring up a couple of words about the Hindenburg Omen signal. You may have heard a little bit about this lately. We've started to see some of these signals firing off. What is the Hindenburg Omen signal, if you haven't heard of it? Well, it's defined by the following criteria: the number of issues in a specific exchange. In this case, it's either going to be the NYSE or the Nasdaq, hitting 52-week highs and 52-week lows at the same time. Must both exceed 2.2% of the number of issues in those exchanges. So think about this. You not only have the exchange hitting new highs, but also new lows, new 52-week lows at the same time, right? So it's going in different divergent locations, right? The McClellan oscillator must be negative that particular day. The exchange index must be above the 50-day simple moving average. The index is greater than it was 50 trading days ago. New 52-week highs cannot be more than twice the number of new 52-week lows. And all of this has to occur on the same day. Now, I'll show you an easy way to figure this out in just a minute. So what does this all mean? Last Thursday, we had both the Nasdaq and the NYSE triggered this signal, with the Nasdaq showing back-to-back signals 2 separate days. First time since 2014 that a signal triggered on both exchanges in the same day. For all the signals that we've seen that have been identical to this is the mean return on this signal alone 1 month out was about minus 5%. Okay, minus 5% is really not that big of a deal in terms of a move. That's not even a major correction of 10%. Now you can see this chart that is from sentimenttrader.com. So I want to give credit where credit's due here. As you can see, some of these have been very significant, at least predating a move. This one was not significant whatsoever in 95, 96. This one was significant, but notice also the amount of time that it took before the selling kicked in. These two in 2007 were very timely. these signals on the Nasdaq back in the late 2014, early 2015 timeframe were important as well. Okay, and now we run into May, June timeframe of 2017. What's going to happen with these? Here's another way to look at this on the Nasdaq, and again, some of these depend on exactly how you define the criteria, so there is some debate about those. You can see in this chart, which is put out by opportunityidentified.com, that we have several different signals around these turning points, more than just one little blob here and there. There are several of these showing up, so you can see that in some cases these are very important, but in most cases it takes a long time before any kind of significant downside move is really hitting the tape. Okay, so this Omen does not guarantee large market corrections. Rather, it highlights when the market being measured showing signs of fracturing. So think about this. Again, fracturing means that you've got some stocks in that index are racing forward at 100 miles an hour, and some stocks in that index are locking up the brakes. So this is where you get into markets that just don't make any sense anymore. So there is, with this signal, a considerable possibility of a notable downside move after a confirmed Hindenburg Omen, and the move usually occurs within the next 40 days. So this signal has only been correct at predicting sell-offs about 30% of the time, though. So this is somewhat like the death cross with a 50 and 200-day moving average. Okay, most look at this signal as impending weakness and not necessarily a crash. So people they fall in love with the romance of the Hindenburg, and they attach that visual significance to it, that a Hindenburg Omen means a massive, massive crash coming along. In some cases, this has been the case. In most cases, it's simply a correction of maybe even modest means. Okay, so now where you can find this is if you go to stockcharts.com, you can search on symbol. If you just search for Hindenburg, you'll see a few different symbols that you can pick up, and you can kind of get an idea of where we're seeing these lately, right? Or you can probably also code the logic for these into your favorite charting platform and code the Hindenburg for that. I would rather just do something simple like this. So getting back to the NQ chart, this thing is by far leading everything else that's out there, but there is a point where too much is too much of a good thing. Now, looking at the other side of the tracks, we have the Russell, which has been basically range bound since the beginning of the year. So we're going to watch the Nasdaq and the Russell to determine where the next clues are coming from. The Russell, by all means, should have broken out to the downside after last week's reversal. It has not. Now we have a lot of catalysts coming up in the next couple of weeks. Perhaps we will break the logjam. All right, folks, that is it for tonight's report. Thanks for listening, and we'll see you tomorrow.